Hello everyone and welcome back to the channel, and I hope you guys are doing great. So in my today's video, I'm going to talk to you about a company called as Delton Cables. So they are into cables and wire business. We'll go through their recent Q4 FY26 results, and we'll go through the investor PPT summary. And you might be asking the question, Masood, why not the con call summary? Because this company does not do any con call, so any information that as a analyst or investor you get is through only through the investor presentation, or you drop an email to their investor relations. So we'll go through that. Right before we get into that, I just tell you in brief about this business, how this business is slightly different from the other cables and wire business which I have how to say done earlier, right? So they are into they make cables and wires, and they, if you actually see, they make cables and wires for which is used in EPC, engineering, procurement and construction, then for railways and for telecom. So these are the three different sectors that they serve into, and they are a leading low voltage player, right? So they do not manufacture these cables and wire for high voltage users, but for low voltage users. So this is where their strength is, if you actually ask me. And let's look at their result and see how things have gone for them for Q4 and for the whole year, right? If you look at the full year result, sorry, Q4 FY26 result, the revenue grew by 58% to 320 crores, but PAT was almost down by 73% to 1.26 crores. And if you look at the whole year revenue, it grew by almost 39%, but PAT was up by only around 11% to 15 crores. So over here, if you look in terms of the Q4 revenue growth was quite good, and over if you take the overall year growth also, it was quite decent. But we can definitely see that the margins are, margins got impacted. And obviously, at the back of it, in the investor presentation, it was clearly shown that it was because of, huge high input cost and supply chain disruption. So this directly impacted their overall production. At the back of it, overall margin got decreased, and, the profit did not, instead of growing, it do grow for the, for the Q4 and for the whole year, it did not get the, it could not even match up the revenue growth at all. And so that was the main reason for the margins getting impacted. And if you look, if we divide their the revenue as per the segment that they have, right? As I told earlier, they serve three segments: railways, EPC, and telecom sector. So the EPC is their biggest segment. So if you look at the contribution from EPC, it was around close to around 52%, which was a growth of almost which is a growth of 87% YOY. And if you look at railways, right, the contribution was around 20%. And if over here, the this segment did not grow, but it do grew by 21%. So we, as a, if we just look at the numbers, we might think, okay, something might be wrong, that is the reason why there was a degrowth. But from the comment, it was very clear that it was intentional. So the company is trying to reduce their exposure to always, and one of the reasons that they gave is, right, because it's a low margin profile, so which is impacting the overall profitability. So what they want to do, they want to reduce the exposure overall in the coming years, and that is the step towards that. And if you look at the last segment, which is telecom and others, it contributed to around 19%. Over there was no number given for the your YOY growth. And if you look from the export, I think that's where they are expanding at this point of time, because their export increased from 70 lakhs last year to almost 14 crores this year. And if you look at their order book at this point of time, it is close to around 513 crores, and almost 90% of this order book is from the EPC segments. Over here, the order book looks decent at this point of time, but at the same time, if you look, it's a concentration, right? Because all the orders are coming from the EPC segment. I mean, if there was a growth at least in the telecom sector, it would have been good. But here, majority is coming from them, and that could be a challenge if something goes wrong with this segment. So, and or one of the most important customers who orders these cables from. So that is the thing that I look from that perspective. Okay, and if you look from the expansion or capacity expansion, there was nothing mentioned. So it looks like the company at this point of time is quite happy with what they are, and they're just trying to improve their overall profile margin. And in terms of guidance also, there was no guidance given for the next year. So that could be a challenge for the company in the going years, because see, I can understand if the company had a capacity utilization of only 15% and increasing it to 90%, that could help in the revenue growth. But over here, I couldn't see any, capacity utilization number or ramping up it up. So that could be a challenge. So overall, if you look at this company in the past 5 years, right, they started changing and their business model and the way they were doing things. and the revenue grew, because if you look at the past 4 years, especially from 2022 to 2026, they almost grew their revenue by almost 6 times, right? And obviously at the same time it rewarded the shareholders also, but after that things have got stable. The revenue is not growing in that much, and there is no further expansion plan, right? So this is one thing, as a investor or an analyst, one needs to look forward is, right. See, whenever uh, we are looking, you are looking for a company or analyzing a company, right, and understanding what they are doing, right. So till the time the future looks good and the company is doing something, the market will keep reporting, because the market prices in the future much before only. And once, see, if you look, the revenue growth was good this year also, and last year also. But at the same time, but if you look, the the value of the stock is on the decline. The reason is why, because the people who want to invest, they do not see anything in the future what is happening. If the company was saying, okay, I'm going to grow by another 50 to 60% in the next 4 years. We are increasing our capacity. All those things were happening, and we are reducing the overall exposure from one segment and improving into other. All those things would have mattered. But over here, in the future, we don't know what will be the growth. We don't know if the expansion is coming or not, and that is the challenge, right? And that is the problem which just Delta Cable is facing right now. And that is one of the reasons. If I was the one who was planning if I were looking for this, I would keep away from it at this point of time and see and look at what the management is going to do in future. How are they are expanding? How are they going forward? See, when we are looking to try to invest in stocks, we should not look at the past and see, okay, I will invest. We should look current and what the company is going to do in the future. That what really matters. Past is past. I mean, you can go and look at the example of HDFC, Kotak, Asian Paints, no matter which companies, right? They have delivered amazing results. But in the past 4 years, what has happened? I mean, FD has given more returns than them, because the stock market does not care. It looks at the future. It doesn't look what has happened in the past. All it cares about the future and how things are going to improve. Obviously, Delton Cable is not at that level, but the rule applies to any companies. And that's the case with Delton Cable at this point of time. And if you guys like this analysis, please do hit like and subscribe to my channel. Thank you and God bless you.